Hello, good afternoon, each and everyone. Welcome to Epic Learning Center. Our today's webinar is on hot stocks and some of the stock we would like to discuss, particularly from KLSE and SGX. Apart from that, I'll be having a one-to-one conversation in the end with each and everyone on the markets. Our today's topic actually is more about sharing the current updates on the market and what is happening in Asian equity markets, what are the reasons, and then I'll share KLSE charts and SGX charts, and then some of the stocks which I would like to recommend to each and everyone. I would also request each and everyone to have a pen and paper with you. So if you have any query, if you have any doubt, you can ask and I'll be happy to answer you after the webinar and take 10 to 15 minutes, particularly responding your queries and clearing your doubts. This is the contents that I would be sharing with you throughout this webinar. I'll be sharing about us, then some particular trading strategies. Then I have not uh, included global markets chart, but then I have some factors I would like to share with you and throw some lights on it about global factors that are affecting the market right now and overall uh, scenario of the Asian equity markets. And then I will take you through stocks of KLCI and SGX, also their index chart, weekly chart, and I'll share the support and resistance and then you'll have to go through some of the queries in the end. So please take a pen and paper and write down all your queries, and I'll be happy to answer that in the end. About Epic Research is an ISO 9001-2008 certified company and a leading financial service provider with presence in global capital markets. Epic has offices and representatives in United States, Singapore, Australia, and other Middle East economies like SGX, KLSE. We are headquartered in India. We provide stock recommendation and signals for SGX and KLSE markets. We have a full-fledged research operations and we have proven ourselves as an investment advisory company that produces and delivers high accuracy stock tips and recommendations for the Singapore market as well as Malaysian market, and we provide recommendation in these of the global exchanges that we cover: SGX equity, SGX derivatives. We also cover SGX Nifty, which is traded on Singapore exchange, KLSE equity, KLSE derivatives. We are also the only provider of recommendations in FCPO Malaysian commodities market like crude palm oil and KLCI index. We also cover global commodities like bullion, energy, and agree on COMEX. We also cover global forex, major currency pairs, though on special privileges to our HNI and ultra HNI clients. We try to give them insight about every currency pair they specific are that ask that can be exotic or that can be a minor currency pair. So we also have that platform of service for our international clients. I'll share some trading strategies. These are especially actually designed for our international traders and who are specifically trading in Singapore exchange or uh, KLSE exchange. And these are actually designed for them to these are actually designed for them. And the strategies I would like to discuss these 5 points. So I'll start with the Epic Research trading strategies. These trading strategies are specifically for our international clients who are trading in SGX and KLSE. These 5 points you have to remember when you are trading an international exchange, because when we provide investment advice or any recommendation, we follow certain strategies, and that is same for every investor, that can be intraday or positional or one who is having a short to long term view. If you receive a signal which says certain value, then you have to wait for execution or put a pending and stay in queue at particular price as given. For example, if we are giving a recommendation, for example, buy Denko Industrial, 8176 is the code, at above 0.430. Now at above, you have to wait for Denko to reach 0.435 or 440. You actually don't have to buy it on 0.430. You have to buy it on 0.435 or 440. So that's why you have to wait for execution, put a pending and stay in queue at a particular price as given in the recommendation. If signal is from CMP, then you have to have high reaction time and need to take an immediate entry. For example, if in the same script uh, counter by Denko Industrial at CMP 0.430 or 0.440, in this particular point, we actually give a range to our client. This particular range is of 0.10, 0.10 here, 0.430, 0.440. So actually you have a particular range to enter in this particular area. So you need to understand that when you are recommending at CMP, you have a certain range of price to enter, while in case of above, you only have to look at this level, and if it breaches 0.430, you have to enter at this level. So in this case, when there is a above or below, you have to stay in the queue or put a pending and wait for its execution, while in this case you have to have a high reaction time and need to take an immediate entry. If in above signal you have to take an immediate entry, if you cannot, or if you have missed the entry, you can message your agent for the same. When you see that signal states CMP, then you have to make an immediate entry and your action should be very fast. So these are certain points you need to be aware of. Now when you're trading, you receive three targets and you have to exit 60 to 70 quantity on first take profit, 50 to 20% on second, and 10 to 5% of third. While waiting for second and third, make sure that your SL stop loss is revised. Follow given stop loss and always revise stop loss if waiting for second and third target near to cost, so that whatever you have earned 60 to 70% in first target, you actually take that away with you at the end of the session with your portfolio in green. Otherwise, if you don't revise your SL, you are actually suffering this spot profit while holding on to your position for second and third targets. You need to wait, but put your stop loss near to cost, or above just your cost price, so that you just have to pay the minimum brokerage and you're out with 60 to 70% profit which you have earned on first target itself. If your trading terminal does not allow you to put target price in advance, then you have to put Q for sell at our given target price just after the execution of the signal. So please follow these trading strategies when you're trading in SGX or KLSE. If you follow this, you'll actually have a high churnout of your portfolio in the end, and you will end up having the best optimum result, the best optimum profit at the end of the day on our investment recommendation and signals. Moving on to the next slide, epic research trading strategies. Now, these trading strategies at large cover all the markets from equity, commodity, agri, and soft energies, bullions, derivatives. For each and every market, it is particularly designed for mass clients. These are quite simple in nature, but very useful when you're trading into the market. You just have to follow it very sincerely and religiously and have a discipline when you're trading. Only buy above or below, as we have discussed in the previous slide, that you need to buy above or below. Please keep proper stop losses in all your trades or revise after booking profit, trail the stop loss and revise as advised near to cost or above cost. Do not trade in trials, only observe the calls. Whenever you are getting our investment recommendation or free trial, you need to understand that you have to observe them so you can see the momentum and the rhythm we are giving in our stock. Now, we in SGX and KLSE particularly try to mix these counters from penny stocks to uh, a bit higher end stocks which have a large cap valuations, which are uh, high capitalization in the market. So we try to cover them so that each and every investor in the market is satisfied. Though we try to focus somewhat on penny stocks so that it is easy and accessible for every trader at large. Never overtrade. Don't overtrade whenever you are trading. Please invest your 30 to 40% capital in single recommendation. Don't put all your capital into just one trade. Try to separate it. Try to make parts of it and invest 30 to 40% in each recommendation so that even if you are having other recommendation in the market, you can invest in that as well. Never trade on rumors. Please don't trade on rumors. There are fundamental factors and there are technical analysis which is working in the market. If you are well aware about it, you'll be trading very happily in the market. If you are trading on rumors or news, please don't, because price discounts everything. Whenever you are seeing any price in the market, it is already being discounted. So don't trade on rumors. Just focus on valuations fundamentally and technically. Always consult our advisors or agents in case of any confusion or query. If you are having any confusion or query in the market related to it, you can call us at 6531581402 or 6035021947. The better you communicate to us in case of any confusion or query, the better will be the result you'll have in your portfolio at the end of the month. So have a strict discipline and follow please religiously to consult your advisors in case of any confusion or query. Whether market is being bullish, bearish, or if you need any particular assistance related to your portfolios, you need any advice on your holdings, you can please call us or you can also mail us. We suggest to trade on all our calls and maintain uniformity in trading patterns. Do not change the trading capital lots in the middle of the month, as this will disturb your risk reward ratio. Those trading in single lot need to book profit in first target itself. So these are some of the strategies, and you'll have to follow them, and it's very simple in nature. If you follow them, you'll have the higher churnout of your ratio, higher churnout of your profit and its ratio at the end of the month. I'll move on to the next slide. Global factors. Now, the recent fall in the market, the recent downward momentum we have seen in market is being listed in this particular slide. China's yuan devaluation. This is one of the factors which is actually in sight in recent scenario. China's yuan devaluation. We have also published our comments on Nikkei recently about this particular devaluation. Now, this particular devaluation actually has been stemmed from a market which falled, continuously for three trading sessions and wiped out almost $3 trillion from the market in just few trading sessions. This is somewhat related to that, and though IMF has accepted and welcomed China's recent devaluation, but you also need to understand that somewhat the market in China was feeling cash crunched because most of the money which was invested in market, it can be elite group of investors or ultra China investors, and suddenly a fell in the equity market of China and stocks being halted and stopped from trading. So people were cash crunched, and recent China's devaluation is a move and a policy change to a more freely traded yuan on the global front. So this is one of the factors which has actually affected the overall Asian exchanges. But this particular factor has its impact in the very short term scenario because most of the exports oriented economies like Singapore or Malaysia or Taiwan or Thailand and these economies had their exposure of exports to China very much. Somewhat it was around 20% their exports was to China. And also investment in these economies was by some of the foreign players of the China or who were holding some of the investment in these economies. So the recent downward momentum which we have seen in global equity markets is somewhat reaction of this event that has happened. This is quite short term in nature because in a longer term time horizon we may see more flexibility in valuation of yuan against other currency, and there may be a change, though a change of 1.9% which has been done recently is quite low, but if it goes to 4% or 5% by the end of the year to boost exports and have a more freely traded currency, this will have a long term impact rather than a short term scenario. Federal Reserve rate hike inside, though in last week in recent FOMC meet, we have seen that Federal Reserve had a but number of data that were encouraging. Unemployment claims at multi-year lows, and activity in the manufacturing sector picking up, though tepid inflation prices has somewhat kept Federal Reserve on hold, and they need more data to evaluate the labor market in particular, because we have to see a pickup in the labor market so that Federal Reserve. So as I've already mentioned that better than expected data for US economy at this time will give uh, Federal Reserve more space to hike its rate, but we need to understand that last 1 week of August and first week of September will be very crucial for the Asian economies. Now, downturn expected in Chinese economy. Well, China has been growing for past decade and was beating the overall developed markets in terms of growth in GDP. But recent downfall in the market and of cash crunch, which is felt among investors and people uh, not willing to invest in the recent scenario of yuan devaluation. So there are certain factors, and the economy, which is expected to grow above 7%, is somewhat feeling contraction in the exports and imports, and the economy may grow below. 7% in coming quarters. The recent yuan devaluation is somewhat you can relate to this particular factor. It is actually a move to boost the exports and the economy, which is expected to go below 7%. So, this particular factor has a long term effect. One need to have a view of 4 to 5 months, maybe 6 months, to see this particular factor go into the bottom line of the economy and make an impact. So with this particular yuan devaluation is somewhat expected to boost the economy, but it will take like a quarter to see the change at the bottom line. Falling Asian equity markets and global markets at times, but falling Asian equity markets is what I believe is an area of concern, because the Asian equity markets was somewhat having an influence of Chinese economy. It was one of the biggest economy was having crude oil and commodity prices and consuming them, and any contraction or any uh, downward momentum in Chinese economy actually affects the overall scenario. So that's why we have seen falling Asian equity markets. This is somewhat a reaction to the recent happenings of yuan devaluation, which we are seeing, and global markets as well are expecting a federal rate hike, reserve rate hike in September. But given that we have a slew number of data as well last week of August, so we'll need to be updated on that. Falling commodity prices is another factor. Having a crude oil at multi-year lows actually affects the overall sentiment of the investors, specifically when we are talking about Asian exchanges. We need to understand crude oil, China being the biggest importer, and and of not just crude oil, also some commodities like especially metals. So the recent fall in the commodity prices that actually hurt the sentiments of the investors. Crude oil prices at multi-year low has actually added an insult to injury, because actually falling crude oil prices and lower demand is what is affecting the overall scenario, because somewhat this particular thing shows the economic pickup or contraction in the GDP as well, because a lower demand actually have a hurting sentiment of the global investors. So you need to understand crude oil prices. Though I have a view that crude oil prices will average out at $55 to 60. There is a wave in progress which is in downturn, but we may see crude bottoming out, and we have seen oversold territory in crude oil prices in international front. So we may see crude averaging out at $60 by the end of this year. So that is why when I was explaining you that you need to have all these factors, you need to have a 3 month time horizon to understand that each and everything is working towards boosting their particular economy. So that's why this particular falling Asian equity markets and Chinese economy we are seeing, because this is somewhat a reaction which is quite short term in the nature. People are actually a bit risk averse in this scenario. So that is why I want to uh, regenerate the confidence of traders, that you need to have a 6 month view, 3 to 6 month view, and you may see some pickup by the end of this year or early 2016. So these are the global factors. You can put down your questions and I'll be happy to answer that at the end of the slide about these factors if you want to have a communication, or if you want any uh, uh, knowledge about this particular factors. Moving on to the next slide. Uh, this is KLCI weekly chart. I have tried to put. I have tried to put weekly chart to make you understand that what is the market right now doing. The chart is quite simple, and it is a weekly chart, so you can understand how the downward momentum has been started. Now we were actually having an overall bullish momentum, if you can see from 2012, this particular area, and somewhat we actually topped out here. When you see the RSI was making a lower top here, you see, and here was the signal. The top was formed here, and RSI actually was in a downward momentum here. So this was another contraction in the charts, and there was a bearish signal. There was a bearish divergence, and we have seen how sharply it corrected, though it bounced back where it made a double bottom here, and it bounced back quite well to 1840 levels. But this was another top which was formed here when prices were near. So this was one of the moments when we have seen the Chinese economy downturn and market crashing continuously. So people were actually risk averse in this time and tried to bottom out here at the same support level which acted as a support 1660 in the past. But we broke this, and we have seen 3 continuous week, and currently at 1574 level as well. We have a negative closing, bearish closing in the chart. Though this particular support has been broken, the next support is at 1520 levels, and that may act as a support. Now, if you are a seasoned investor and you understand the overall scenario, I think this is an overall up move we have seen for past 3 years. And if you can see how the downward momentum has just taken few weeks, and whatever the gain was made in all these 3 years actually was seen wiping out from the market in these particular 2 quarters. So this was actually a momentum which we have seen in the market, but you need to understand, if you are a seasoned investor, you know about the analysis. Though I would try to keep it simple, but this particular rally which we have seen from 1300 level to 1860, 1900 level here, we might be retracing at 61.8% over here. If you are well versed with the technical analysis, you'll see 61.8% will be held somewhere around, as I've said, 1520 levels here, and we may see a sharp turn from here, and people may start accumulating over here. If you also see the RSI, if you can see the RSI over here, whenever the oversold territory has been there in the market, here we have seen RSI at this lows of 20, below 2021. We have seen back in 2011, when we have seen this particular downward momentum and ending, and the market reversed, and we have seen a bullish phase. So these are the RSI at these level. RSI at these level is quite supporting the market, and this is one of my personal recommendation to the investors who are trading into the market, that you need to understand that people will start accumulating, because we won't see a continuous downward momentum. Though Chinese economy is doing its part, but when we talk about Malaysian ringgit, it has underperformed in the past compared to the other economies or other basket of currencies. But this particular chart, if you can see, will see around 61.8% retracement. The RSI at 21 level is quite looking in an oversold territory. The markets are in oversold. Now the up move here, or even a consolidation over here, you'll see an up move. So you need to understand that any bottoming out at 1540, 1520 levels. You see an up move because the RSI is quite oversold. It is at same level we have seen in 2011. So after 4 years, if we are getting the market at this much cheaper valuations fundamentally on the index, you need to understand it is quite lucrative at this level. So I won't recommend everyone to uh, sell square off their position or don't invest in the market. But yes, this is one of the phase where you can start accumulating in the market and you can see a positive momentum building up from this particular levels, because whenever in technical analysis, if you see whenever you have uh, RSI in an oversold territory, plus a retracement of this particular rally to 61.8 percent, you'll see a counter move over these levels. We have seen our rally starting from these levels, and not more from there downside is expected. So you may also have a turnaround. So if you have any long positions which you haven't unwind, that can be one of the times when you have a good holding capacity. You can average it out, or you can put a stop loss somewhere in the index at over here and have a short-term momentum seen in the reverse rally. Uh, if you have any questions related to it, you can surely ask at the end of the slide. I'll try to happily answer that. This is SGX weekly chart. Now this particular chart also is quite same to SG Malaysia KLCI chart, sorry, but the overall upward momentum has been breached. Whatever the gains were made in same last 3, 5, 4 years, we have seen it wiping out from the market in like just 2 quarters, and the continuous downward momentum has actually sent jitter to investors across the globe. So this particular level of SGX at 2970 and 2950 is quite support, but we have seen a closing below it. So we may have our next support at these level of if you can see, it has acted as a support. So somewhat 2850 over here, plus if the 61.8% retracement of these particular rally which we have seen in last 3 to 4 years will be somewhat at 2850, 2900 levels. So if anyone is looking at markets technically, you must know that uh, this particular formation of lower RSIs, you see the markets how beautifully bounced back whenever there was RSI being into oversold territory, and this is one of the points when we have seen markets. Now it is at actually at multi-year lows now. We have seen these lows in early 2014, and after almost a year we are seeing another bottom formation. So if you go out for a fundamental valuations of the stock exchange of this particular index as well, you may see the earnings or the valuations on the index front getting quite cheaper. So one can start looking at 2850, 2870 levels where market may bottom out and have a return, and we may see up move from over these levels. These are the two trend lines I've drawn. This is the broader price pattern. If we hope to sustain, if we're able to sustain 3000 in upcoming week, uh, we we may see a counter move, and that counter move can be back to 3300 levels. So I hope you wait for markets to wait at 3000 levels, and if it bottoms out or gives a closing above 3000 levels, you may see market moving ahead. Now stocks which I would like to discuss, these are some of the stocks I've tried to find, and these are being technically very sound on the charts, and these are for KLCI investors we have at the global in the markets. And first stock is Notion BTech BHD. This particular counter has been in the downtrend. Overall, if you see, uh, there was a downtrend in this particular counter, and it was actually trading at 1.1 to 1.15 levels, and we have seen this price formation here. There was a slower downward sloping trend line, and this was another downward sloping trend line. Now the price actually bottomed out here, if you see, and uh, the RSI over here and the price over here. Now this is a weekly chart, and the doji has been formed over here. Prices has reversed. This is another doji we have seen, and the breakout has been over here. Now we have seen actually a high, lower top, lower bottom formation on the chart, but the prices actually have reversed, and we have seen a price reversing over here. The consolidation has been here. There might be a higher top forming over here, so this is good on charts. The RSI has already given a bullish divergence signal. It was actually making lower top, lower bottom, but RSI is now actually making higher top, higher bottom over here. So we may see an up move over here, and this counter move will be somewhat in the next 3 months. If you see, it can retrace to 61.8% of this particular downfall. So we have given our targets. In the very short term, it is at 0.465 levels, and you have a target of 0.750. But if you have a long-term view in the market, somewhat by the end of the year or around Christmas, you can see this particular counter going back to these level of 0.88, 0.92. And if someone wants to put in a stop loss is very low at this particular point, that you can place your stop loss at 0.350, and it's just 100 cents over here. And the target risk reward ratio is quite favorable. You almost have a risk of 1, and the reward is of 3 to 4. So it is one of the counters. The RSI has a bullish divergence. Prices have bottomed out. Higher top, higher formation can be there. This particular triangle breakout has been in the upside, so one can expect long side in the market, and we may see counter move. And this particular counter move will be short term in the nature, 46750, but you need to have anyone you have a long view can keep a target at 880 or 920. Will have a 61.8 retracement over here. So this is the first counter I have discussed with you for KLCI. My second counter would be micro MSC BHD. Now this particular counter has been in overall uptrend for past 1 year. The prices have actually, this is a weekly chart, the prices have given a breakout of a consolidation over here. If you see, there was a consolidation somewhat. The RSI is now at a lower level. The prices are at a lower level. We have a doji formation on the weekly chart. If you see, you can have a doji formation, plus you have a trendline support. So it's all overall higher top, higher bottom formation, and the prices are ranging in a channel. Despite recent market fallout, the prices have followed its channel, and here, and this is actually lower top formation, but somewhat the overall scenario in the short term is quite lucrative for the stock. The RSI is at near oversold territory. It may bottom out at 040 level, 440 levels, and doji formation will confirm. So a positive momentum will be seen, and the next higher move, higher top formation will be seen in the market. This was actually a head and shoulder breakout over here. So the target has been done, and we may see a continuous uptrend from here, and it may actually the overall trend, if you see, for past 1 year has been in a positive momentum. So the bigger trend over here is positive. The short term correction has happened, the breakout has been there, but now the doji has been formed, and we may see it going to back to 0.40450 level. The risk reward ratio is quite favorable this time. The risk is just of 0.080 cents. You can put your stop loss at 0.280, 0.290, and you may buy this counter with a target of 0.450 to 0.600. and one who has a long-term view can wait for second targets with our small stop loss, and one who has a short-term view can book profits at 0.450. These are the two stocks. My next counter for SGX I'll be discussing is we have seen it recently being traded in the market. It's a daily chart of GCCP resources. The chart has been in a consolidation phase, and these particular price formation has been there. Here if you can see this particular level, the consolidation, and there was a contraction. The larger price pattern actually was getting into a small uh, trading range, and we have seen breakout on the upside. These are the trend line I've drawn. What acted as a resistance in the past is now actually being a support. So risk reward also is favorable. The RSI is overall at 60 level, so it's not that nearing the overbought zone, so one can buy at current levels of 0.132. You can put a stop loss at you can put a stop loss at 0.120, and you can buy it for the target of 0.150 here somewhat, this particular top, and then if it breaks 0.150, one can stop revise their or trail their SL trail their stop loss, and keep a target at 0.180, which will be the this particular level of this particular stock when it was listed. The prices have seen their downward correction, which has happened, and somewhat the wave patterns, if you see, has ended. Now this is another story, and you can see if A, B, and we may see C formation over here according to Elliott wave. So this is my first counter for SGX GCCP resources. You can take a note of it and please put a stop loss at 0.120. Have this target at 0.150, 0.180. My second counter would be shorter group. The stock is quite good. We have been recommending it to our clients across the global exchange of SGX, and giving them signals about this counter. It's quite good stock overall, and it's a daily chart. We have seen it recently listing 2 quarters back, and the price formation has been overall good. This has been a higher top, higher bottom formation. This is the overall trend of this particular counter, and if you see, uh, the higher top, higher bottom formation has been there, and the overall price pattern is this. I've tried to make a trend line, so at this level the risk reward is quite favorable in this particular stock as well. The RSI, which was way above 70, has now corrected to 56 level, and we have seen this formation of RSI whenever it has happened in the past. If you see here, the RSI same levels, and we have seen an up move, so these particular levels are quite lucrative for the stock, and we have a trend line support as well. The overall formation of the chart is bullish. We have seen this price correcting, but they have not corrected that much as we have seen in the index or the overall Asian exchanges, and this technically the stock is good right now to have a short-term view of a buying level. One can buy with a stop loss at 0.50. You can have a target at 0.84. The risk reward is quite also favorable, and we may see it going to its above upper trend line at 0.098 as well in the short-term time horizon. You can note it down, and if you have any queries, uh, and we'll try to answer them at the end of this slide. Sorry, I also like to discuss some of the research tools we provide. These are the research tools we provide to our clients on daily and regularly update them on our websites. You can visit our track sheet at www.epicresearch.my track sheets, or if you are from Singapore, you can visit SG and track sheets. You can visit our reports We upload them on daily basis on our international websites of Singapore and Malaysia. You can access to them, have a market insight of them, and then these are our website. You can visit them, explore them. If you have any queries, you can write to us, and if you have any queries, you can call us at +6531 581 402 or 60350219047. I'll try to answer your each and every query. Uh, so if you have any queries, you can please raise them. I'll be happy to answer them. We have one question from one of our client, that is StarTech charts and formation in this particular chart in the short term. So I'll try to answer that. Now, if you see the formation of the chart of StarTech, our client is asking if there is a head and shoulder formation. I won't say it's a head and shoulder formation because the price is there is need to have a confirmed shoulder because if you see the overall price range now with the trend, if you see the higher top higher bottom formation has been there, just this particular area if you see when the market made a same top and was there, but we haven't seen it breaking the previous lows. If you see the previous lows are not breached on the chart, so this is one of the validation of the uptrend. Plus then you will have overall price action being formed. Now this is somewhat a double top formation which has been formed, but in short term if you say higher top higher bottom formation, this is a daily chart and I don't think there is a uh, head and shoulder formation in the short term. You see on the weekly chart we have a positive closing. The prices have actually made a double bottom. If you see at 0.56 0.55 level, the double bottom formation has been there. The weekly closing has been positive, and if you see the overall momentum of the stock is quite positive. The RSI has corrected as well, and we have seen RSI as well not making much lower lows, and somewhat the prices have bottomed out at 0.55 to 0.65 range. Now we may see another up move from this particular price, and we may see it going to 0.84 0.098. So there is not any head and shoulder, if I may say, in the short term formation. Or in the short term formation the trend has been up, we are in a wave pattern, and we may see next wave stretching to 0.084 level. If anyone wants to have if you can want to watch my webinars on SGX or KLSE or any particular slide you have missed, you can visit our YouTube channel or you can visit our website. You'll see webinars over there, and all the stocks I have discussed or all the recommendations or the market analysis, you can visit there and see. If you have any queries, I will be happy to answer as we are running short of time. What is the overall scenario of the uh, Asian equity market? See, this particular question is quite broad in nature because there are many factors that are working in the market right now. Uh, It can be SGX, it can be Malaysia, or it is basically China's yuan devaluation. Much more action is there in September as well. So this is short term in nature, as I've said. The overall price pattern formation has suggested everything has been discounted it, and this is short term in nature. The overall uptrend is still intact. Markets are retracing, so 61.8% retracement, which is a common phenomenon in the overall technical analysis. So at those levels I think market may bottom out and you may see a counter move. So this is the overall scenario, but you need to wait for the Federal Reserve rate hike action, or that will be there or not in September. So we'll have to wait for that as well. I'll be thanking each and every one of you for being such a nice listener and being part of this webinar. Uh, Myself, Loveless Sharma from Epic Research. Thank you so much for joining in. We'll be taking another webinar next week on certain global factors and global markets, and we'll be sharing more knowledge in that. Thank you. Have a good day. Happy weekend.